Big Bear's stock fell hard after the release of their latest financials. And naturally, investors want to know, can Big Bear skyrocket again? Well, the stock is sitting at $5.85. Wall Street says it's going to $8. But it's down over 20% for the month because the company just reported a 1,500% spike in net loss. Yes, 1,500%. And here's the crazy part. Big Bear is still winning defense contracts, still landing deals in the UAE, and the stock is still up 360% this year. So the real question is, how can a company lose this much money and still get rewarded by the market? This is the exact setup where most retail investors blow up. They chase the rally, ignore the cash burn, and forget the hidden warrants that can crush the stock if momentum stalls. My name is Rick Orford. I've been trading since 1999, and I'm not here to sell you a retirement in a box. I don't do hype. I break down the numbers so you can make smarter, more confident decisions with your money. In this video, I'm going to show you, or I'm going to talk about whether BigBear.ai is a smart, high-risk play with real catalysts, or just another flame-out waiting to happen. Let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/Ricko to get your 10 stock picks right now. BigBear.ai Holdings Incorporated is a decision intelligence solution provider across various industries like defense, intelligence, manufacturing, and infrastructure security. It's well known for its product called TrueFace, which is a facial recognition system. This technology delivers a real-time and accurate one-to-one or one-to-many match against a designated gallery, all completed in as fast as 2 milliseconds. That's insanely fast. And when it comes to defense or security, speed isn't just optional, it is survival. Aside from TrueFace, VeriScan is Big Bear's facial recognition solution, tailored specifically to facilitate traveler authentication across different airport environments. It uses a state-of-the-art computer vision technology that yields fast, accurate, and secure identity authentication. Think about it. Airports, they need to move thousands of people every minute. Every second saved means money, safety, and trust. Aside from its commercial use, Big Bear has been awarded several different contracts from different industries, such as the Department of Defense, National Security Agency, the NSA, and, of course, the US Air Force, highlighting the power of its technology. So you could say this isn't just another AI idea stock. It's already embedded in systems that governments and airports already depend on. So here's the real reason everyone's talking about Big Bear right now. The company released its second quarter financials, and unfortunately, there was a distinct lack of good news. Now, I'm going to dive into the financials in a bit, but as a preview, the company's fundamentals, well, they appear to worsen. The numbers fell way short of expectations, and year-end guidance was adjusted to the worse. Following that Q2 report, many investors, well, they just jumped ship. And that reaction kind of makes sense. When guidance gets cut, Wall Street usually heads for the exits. Still, I see a few silver linings in the report, which I'm going to cover a little later. Now, for now, let's talk about how bad the damage to the stock was. Because when the market reacts this sharply, there's usually a deeper story that's hiding under the surface. So let's start with a chart because the price action tells its own story. And if you want to follow along, go ahead and scan this QR code. At the time of recording, Big Bear's stock price is sitting at $5.85, down over 26% in the last month, mostly attributed to their Q2 financials. Yet the stock still is up 31% year to date and a massive 364% over the past year. So investors who have invested a year ago are still in the green. And that's the paradox. Pain in the short term, but euphoria if you just zoom out a little. As for where the stock could be headed, well, Wall Street cautiously optimistic. 5 analysts rate the stock a moderate buy with an $8 high target price, which should suggest as much as 37% potential upside in the stock within the next year. If their predictions turn out to be correct, 37% is not a bad return in 1 year, though I suspect that people investing in AI stocks would be wanting more out of Big Bear, maybe even duplicating its current 52-week performance. So the big question is, are analysts playing safe, or are they seeing the risks that retail investors are right now brushing off? Time will tell eventually. All right, here's where things start to get real. The financials. And this is the part that most people skip, but it's exactly where the truth shows up. Revenue is down 18% year over year to 32.4 million, while net losses ballooned 1,483% year over year. Now, the net loss incurred this quarter mostly came from the $135.8 million in non-cash charges tied to the 2029 notes and outstanding warrants, along with $70.6 million as a goodwill write-off from past acquisitions. So in effect, these net losses aren't actually money leaving the business like water splashing out of a busted pipe. Well, at least not yet anyway. It's mostly just accounting tricks, right? And that's a key nuance. On paper, it looks catastrophic, but it's not all cash that's flying out the door. However, for me, the real thing to watch going forward are the warrants. Warrants are contracts that let the holders buy shares at a fixed price, kind of like an option. Since Big Bear has increased over 350% this year, those warrants are now worth more money to the holders, but they also incur higher costs for the company, which will be reflected in its balance sheet. And this is the hidden pressure point that most retail investors miss. Anytime you see explosive gains in a stock with outstanding warrants, it's best to check how much dilution risk could be lurking in the corner. The bright side is that Big Bear's current cash and cash equivalents have risen 441% year over year to approximately $391 million, which it can use to further accelerate its growth. Now, while the losses look a little terrifying, the war chest is bigger than ever. And that's the exact kind of financial tension that creates both risk and opportunity. So the stock just took a beating, but here's the thing. Sometimes the biggest drops are setups for the biggest rebounds. Let's talk about what could actually drive Big Bear higher in the third and fourth quarter of this year. First would be the US government's plans to ramp up AI investments for border, air travel, and general military applications. And that's a topic that's been recently brought up on my Discord channel. Included in the One Big Beautiful Bill, the fiscal 2025 budget reconciliation law, it mentions that $673 million is earmarked for the US Department of Homeland Security's biometric entry-exit system. The idea is, given the nature of Big Bear's technology, it'll be one of the frontrunners deploying AI for these systems, as its analytics and computer vision tech align with the DHS's push for faster, more accurate identification and threat detection. And if that speculation turns into contracts, we're not talking about small money here. We're talking about government-backed runway for hundreds of millions of dollars in growth. Second, and probably the biggest catalyst for Big Bear's growth, would be its UAE partnership. Big Bear announced a deal with EasyLease and Vigilix to develop and deploy AI solutions across mobility, industrial, and other high-growth sectors over in the UAE. And this represents a foothold in the international AI market that, if the company can play its cards right, can turn into the first wave of its global expansion. They've also tied themselves to a $1.4 trillion UAE AI investment goal, which could be a huge tailwind if Big Bear is rewarded a bigger partnership. Now, you might be asking, these are early stage partnerships, so what's the big deal today? Well, Here's why I'm cautiously optimistic. When I'm researching a stock, I have my go-to sources, right? My notes, a couple data platforms, a few analysts that I actually trust. But even if a shiny new app promises faster alerts or better, prettier charts, I stick with what I know works. Why? Because I've built habits around it. I know where to find the numbers in seconds. And Big Bear's customers, whether it's the Department of Defense, an airline security team, or one of the companies in the UAE, well, everyone just works the same way. Once they integrate Big Bear's analytics into their own workflows, switching to someone else isn't just inconvenient, it's disrupted. And that's why even in a crowded AI market, a foothold can turn into a fortress. So you could say their tech doesn't just win contracts, it builds moats. And in investing, moats are everything. Now, before anyone gets too excited, let's flip the coin, because with every potential rocket ship, well, there's a lot of jet fuel waiting to blow. And the first and biggest risk that I see is that Big Bear is falling at a rate faster than it rises. The stock price is down despite the partnerships that were announced along with its second quarter financials, potentially reflecting a weakening trust in the company's future. And that's what the market's been saying. We've seen this story before and we're not convinced, at least not yet. And at this point, there is really no guarantee that Big Bear can dominate in its industry. Investors are looking for the next Big Bear, right? For companies that are displaying the same potential that Big Bear did before it got popular. Attention is already shifting today, right, towards other emerging microcap AI players with similar defense and government applications. One example making its way into conversations is Mobilicom, a company that's developing secure communication and control systems for drones, which some see as having the same kind of edge Big Bear once offered before its big run up. It's not a direct competitor, but it does represent the type of innovative player that could capture investor interest the same way that Big Bear once did, which means, for good or for worse, the interest around the company may be flowing elsewhere. So you could say that the big risk here isn't just financial, it's attention. Once the spotlight drifts to the next shiny AI stock, momentum, well, it can dry up faster than most investors can expect. All right, so let's stack up the numbers against the competition because valuation tells us whether we're paying for potential or just plain hype. With a price to sales ratio of 10.75 and a price to book of 6.38, despite posting a negative 186.77% profit margin, Big Bear looks overvalued, at least compared to its peers like Palantir, C3, or KBR. I mean, C3 trades at a price to sales ratio of 6.2, Palantir at a lofty 149.08, but with positive margins, and KBR at just 0.83, and it's also profitable. The market is clearly pricing in significant future growth for Big Bear, but so far the financials don't appear to justify that premium. And that's the tension right here, right? Wall Street is betting on what Big Bear could be, not what it is today. For high-risk, high-reward plays like this, I stick to a disciplined, numbers-based exit plan. For those looking to buy Big Bear, I'd limit the position to no more than a portion of my risk capital, and maybe even set a loss threshold of 15 to 20%. But of course, your specific trading plan for high-risk plays like this will depend on your own preferences. So the big question is, who is this stock really for? If you follow AI tech closely and want to be part of a high-stakes defense and government AI story, well, this tech setup could be ideal if you have a long-term horizon. I can totally see some upside in the stock, especially if its expansion plans and government contracts gain more traction. But remember, the stock price is going to be jumpy, and that means that profits can swing to losses before you can even realize it. You could say that this isn't a set it and forget it stock. It's more like a riding a roller coaster after drinking a milkshake. But what do you think? Do you agree with anything that I've said in this video? Are you buying or holding or selling Big Bear? Let me know in the comments below. And hey, if you liked this video, if it helped you, hit like and subscribe to the channel so others will find it as well. In the meantime, thank you so much for watching, and I look forward to seeing you next time.